Hello friends. Welcome to Current Affairs Review. Topic for today's video is Goods and Services Tax in India. During 1999 to 2000, extension of VAT to sales tax was proposed and given a go-ahead by PM Atal Bihari Vajpayee in a meeting with his Economic Advisory Panel. A committee was set up under chairpersonship of the then Finance Minister of West Bengal Ashim Dasgupta, which was later asked to look into the implementation of GST as well. However, it was delayed due to opposition. After the post-formation of the Narendra Modi government, Mr. Arun Jaitley, the then Finance Minister, had introduced GST bill in the Lok Sabha, which finally, in 2016, a constitution amendment bill was passed which paved a way for GST. Although the bill was demanded to be sent back by the opposition-led Congress government, in August 2016, amendment bill was passed, and over the next couple of days, 18 states ratified the Constitution Amendment Bill, and the then President Pranab Mukherjee gave his assent. Prior GST implementation, there were many indirect taxes like sales tax, excise tax, service tax, central sales tax, additional excise tax, and so on, which were absorbed in GST. Complexities and additional costs arose due to such multiplicity, but with the introduction of GST, there is less paperwork with only one tax to deal with, eventually bringing about ease of doing business, which was said to be made, along with increased efficiency. There are three components with which GST is made up of: a central component, CGST, a state component, SGST, and for the interstate movement, integrated tax, IGST. In various stages of production, the CGST which is paid in previous production stages is to be adjusted, input tax credit, against the CGST which is due in the current production stage, and a similarly procedure is followed for SGST as well. There were confusions as to how the tax rates for GST would be decided for the various items and the criteria as to which item would fall in which tax bracket. This decision was taken by the GST Council after due diligence and by consensus. India has 4 tax slabs under GST which covers varied products and services: 5%, 12%, 18%, 28%. The tax structure is revised to ensure that the essential commodities are taxed at lower rates, whereas higher rates are taxed for luxurious goods and services. There are some major commodities that are not under the purview of GST: alcohol for human consumption, electricity, and petroleum products. Also, there have been some essential commodities that have been kept at zero rate of tax, where the idea behind this is items which are commonly used and a necessity, especially to the needy sections of society. GST was viewed and marketed by many as the second tryst with destiny, a reform that would unify the nation as a single market and simultaneously assisting in ease of doing business in India. Initially, experts said that there would be a rise in GDP, the inflation would reduce, eliminating the cascading effect and keeping in check black economy in the nation. GST was supposed to benefit the backward consuming states since GST is a last point tax being collected where final sale occurs. Experts believed that since GST had some fundamental flaws, a casual rectification will not suffice. Concerns arose among the producing states, where states which are comparatively more advanced produce more than the less advanced ones. Thus it was expected that the less developed states would be collecting proportionately more GST, even though it was less in absolute terms. Since GST proposed one tax on a particular commodity or service all over the nation, it was opposed by the states because they believed that this loss of power to fix tax rates on various commodities compromised fiscal federalism. Alcohol and petroleum products, which have been kept out of the purview of GST, the states had some autonomy of collecting revenue from them. Hence, this provided support during the pandemic when sharp decline in tax collection was witnessed. Download material for this issue from our website. Please like and share this video. Please subscribe our channel and hit the bell icon to stay updated. Thank you.